Thanks to our friends at The Motley Fool for sponsoring this video. Check out the link below, fool.com/the smattering, to get access to the 10 best stocks to buy right now. All right, time to talk a little bit of Amazon earnings. The big e-commerce giant, the leader in cloud services, and beginning to be a big player in advertising, just reported earnings. I'm Jason Hall. This is The Smattering, and I've got my good friend Jeff Santoro back with me after a long time. We're going to talk about the three things that really stood out to us with Amazon's earnings. Hey, Jeff.
Hey, Jason. Yeah, you mentioned the first thing I wanted to talk about, which is the advertising revenue. We think of Amazon as an e-commerce player. We think of Amazon through Amazon Web Services. I don't think we think of Amazon much as an advertising platform, but that's what it's becoming. So their advertising revenue grew really nicely year over year in this quarter. But the metric I think that sticks out to me is it now represents almost 17% of total revenue. And that's up from around 12% just 2 years ago. So as that continues to grow and become a bigger piece of the overall revenue pie, I think that's a really compelling and interesting thing to keep an eye on for Amazon shareholders.
Yeah, it's because it's kind of like AWS. This is a really highly efficient, cash generative, high margin part of the business. Now, the negative to it, I want to point out, Jeff, I think is worth mentioning, is that they're kind of treating the search function on their website and through their app as Google, right? And Google gets money for those above the fold, right? The paid ones that come up, and Amazon's doing the exact same thing, right? So I think they really need to focus on managing like the impact of that on the customer experience, because I can tell you anecdotally, there's tons of time I search for something and the ad that shows up is close, but there's something really important that I was looking for that it doesn't have. So I think they really need to focus on that. And with that said, I want to talk about the second one. And I mentioned it a little bit. We talked about the cloud and how AWS has really become the cash machine for Amazon over the past decade. And we're seeing pretty good growth. Revenue was up in the mid-teens. It's still growing faster than the overall business, but the growth is decelerating. Last year, it grew mid 20% range, and it's growing slower. So really what that's telling me is that it's the trend that we're seeing broadly in the industry. Google's cloud business is growing slower. Azure and Microsoft also, revenue is still growing, but the growth rate is starting to slow. This is an industry-wide trend. So investors need to kind of think about that it's going to still drive growth and that it's high profit growth. But are we starting to kind of get to a critical mass where it's maybe not going to be a year from now, 2 years from now, maybe it's not growing faster than the total business anymore? And the last part of it, this is something I've read in a few places, is that Amazon may have higher exposure to startups that are using cloud services. And as we go through this weak phase of funding for startups, if we see some of its startup customers start to maybe fail or start to be acquired and rolled up into other companies that maybe aren't AWS customers, Amazon might be affected in more of an outsized way by that than some of the other cloud services providers, but only time's going to tell.
But it's also important to remember they're still the leader by a decent amount, and the total addressable market is going to continue to grow. So they don't need to play catch up. They need to just hold their turf and just keep gaining share of the growing market, while also to some degree fending off competition from the other cloud providers.
Jeff, we got one more thing that we're going to talk about. We've talked about some of the newer things with Amazon, but what's old seems like it's new again. Let's talk about that North American e-commerce segment.
Yeah, so for the last several quarters, the operating income has been kind of carried by Amazon Web Services for the whole business. And the North American segment and the international segment have been losing money on an operating cash basis. That finally reversed, at least for the North American segment this past quarter. They turned an operating profit in that segment for the first time since Q3 of 2021. So almost 2 years before they were able to pull a profit. Now, they still have a long way to go to where they were prior to the pandemic in terms of operating profit for that part of the business, but really good sign to see that turn around. And I think it says to us that some of the efficiency efforts that have been made by new CEO Andy Jassy are really starting to pay off.